Portfolio Builder members, welcome back for our Monday Trade Alert where we play the SPY ETF every Monday, Wednesday, Friday. It hands us a nice income trade. That's because there's expirations 3 times a week. Today's trade generated a nice profit, although you're probably up a little more than I am because the SPY has traveled higher since I issued this Trade Alert and took my screenshots. Let's look at what happened from Friday through Monday. Here's the Friday Trade Alert, which had also generated a nice profit of $2.15 a share. Today's is a little bit lighter than that, but that's okay. If I zoom in on it, this was the trade we gave out Friday. We sold the 296 call and bought the 289 put. All that means is we give up profits if the SPY went above 296, which would be outrageous, and we'd be very happy just to get $2.96 a share. And on the other side of the coin, if anything disastrous happened to the equity markets over the weekend and the SPY had dropped below $2.89, we would still get $2.89 a share because we're long the put. So it's like taking candy from a baby. Think of those gamblers at the casino who go from table to table recklessly, losing all their money. That's who buys call options, and that's why we love to sell them. On the other side of the coin, buying insurance. Great way to protect yourself for cheap. For 43 cents, we can protect ourselves to the downside. And let's see how this trade ended up. So we were trading at 292.49, entering the trade, and we paid a debit of 28 cents to put on this option caller to protect and profit. The result was the SPY traded to 294.34, which you can see up here, giving us a $1.96 profit on the SPY. The caller cost 4 cents to close today, so we lost 32 cents on the protection. $1.64 a share times 1,700 shares is a $2,788 profit. And that's just from Friday through Monday. If you're on a free trial, I highly recommend you actually take the trade so you can pay for your membership by the time your free trial is over. So far this month, we're up 1.1% in the first 7 days of October for a $16,000 portfolio profit. And that's with all of the portfolio's assets, not just the SPY. We had a slow September of only 0.3% return. And now we're shooting up to 1.1% in early October. To close out the trade alert we gave you from Friday, all you need to do is buy to close your 296 call and then roll into the new trade. Now, I'm not revealing the new trade in the free video we give out each day. That's something that you'll find in your email right below step 1. So just go back to your email, scroll a little bit lower, and you'll see the trade alert. Now, if you're on an expired trial, you will have to upgrade, and there is a link to do that as well. Okay, so that is the results of the most recent trade alert. Did have some nice testimonials come in over the weekend. I just wanted to share those just one of them. Don't want to spend hours reading all the testimonials. Our program's so easy to follow that everyone gets the same results, so we're either winning together or losing together. And here's what one member wrote in. Jason, I had a rather lengthy testimonial I had prepared and had to whittle it down to something more reasonable in length. Doing so, I omitted a number of important points about your advisory service that I think potential customers might appreciate. So here they are for whatever use you can make of them. This advisory service is not complicated. It's easy to follow. Even a Luddite like me is able to do so. You don't have to be wealthy to get top-notch customer service. No need to wait around and monitor your computer all day waiting for trade alerts. Every day at noon Eastern Time, they arrive with easy-to-follow instructions. And I can't stress this enough. This is important to me, how they emphasize trading that holds losses infrequently as they are to a minimum. Do yourself a favor and give this service a try. You'll be thanking me for this advice if you do. So I'll read a new testimonial each day. Thank you so much for that, Gary. Here's a quick little piece about our program, and then we'll jump into the top news I've collected over the weekend. And I've got some very, very gushy details for you guys today, as well as market predictions for the week. Daily, on-the-go income trade alerts. These take 30 seconds or less. We dish them out to you once a day, Monday through Friday at noon Eastern. You can do these on your phone on the go as we send you a text. There's no reason anyone can't follow this program. Target return of investment is 1% a month. We've only had one losing month of negative 1% and an average of 1.7% return per month so far. For every $100,000 invested, our goal is to generate a $1,000 per month profit. Income and safety, not growth or speculation. Our simple 4 ETF portfolio is extremely diversified and all you'll need for your retirement. Simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. My promise to you, I will protect your assets and show you how to pick the low-hanging fruit. Our put options hanging right below the SPY and TLT ETF make it impossible to lose very much money, period. And remember, for every $50,000 you deposit at your broker, you'll actually have $100,000 of buying power. So this is a great strategy to put all of that buying power to work because we're so conservative and hedged against downside risks. Here's the best setup. For a $100,000 portfolio, you buy 100 shares of the SPY and trade it Monday, Wednesday, Friday. 600 shares of SLV currently in our Tuesday play, which costs around $11,000. 300 shares of the TLT ETF, which will cost you approximately $45,000. And again, the most important part of this is when the stocks go down, the TLT goes up. And usually when the stocks go up, the TLT barely goes down. That's the general trend we're in right now. We'll talk about the macro in a little bit. And then on top of that, a buy and hold position of 333 shares of GDX. Now let's talk about what each of these are. The SPY is the S&P 500. It's an index product that has the most funds in the world in a single spot, more than Ray Dalio's $122 billion hedge fund. In fact, it's much larger than that. It's more highly traded than any other security in the world. In fact, you could take the top 5 traded securities and it doesn't even come close to the trading volume of the SPY. So if you like liquidity, you got it with the SPY. It's automatically rebalanced for you, and it has option expirations 3 times a week. There's no product in the world that's as attractive as the SPY. SLV is spot silver. Silver prices have not gone up to record highs like gold has. So we're playing that silver spot price will soon leapfrog up towards a much higher price, probably in the $22 to $25 range, to follow suit with gold. TLT is the long end of the treasury market. We're playing the interest rates. We're not really trying to get rich with the 2% bond yield right now on that 30-year. And so this has been our single most profitable play all year, is trading the TLT. So we'll take a look at that, but you definitely want to have your portfolio balanced in this way. When the China trade deal breaks down, the SPY will most likely pull back and that TLT is going to pop up. In the meanwhile, the TLT is still floating higher and higher because the Fed is expected to lower interest rates and resume quantitative easing. In fact, they already have. They've picked up $200 billion of treasuries and added it to their balance sheet, probably from JP Morgan, over the last several weeks. Meanwhile, the GDX is the gold miner ETF. We played GLD, spot gold, all year, made some great gains in that. And now that the price of gold is so far ahead of silver and really at a very, very high level, it makes sense to invest in the miners who can profit from these elevated spot gold prices. So while these top 3, SPY, SLV, and TLT, will always have a put option below and sell a call option above, the buy and hold position, we have no covered calls. That means we want to capture big jumps in value on GDX and not short ourselves by selling call options. So that's why that's set up in such a way. If you'd like to start off with a little less work and a little less capital, $66,000 builds this portfolio, achieves the same strategy 100 shares of the SPY, Monday, Wednesday, Friday. Take Tuesday off, go golfing. 200 shares on the TLT Thursday. Again, you can take these trades while you're golfing. It's really that easy. And you'd still buy and hold $6,000 in GDX, 200 shares. So again, we still have an equal bond stock ratio and a 10% buy and hold in the precious metals GDX. Want to play it super risky? Well, I love this setup. You're going to have some serious swings to the up and downside, but you're playing silver on Tuesday, the bond market on Thursday, and buying and holding GDX indefinitely until we feel like this trade war and quantitative easing is coming to an end. And flash alert, that's probably not going to happen for at least 2 to 4 years, if not longer. Now, if you did miss the trade alert because your free trial has ended, call Dean at 505-322-7515. He's an expert trader. He does our program. He also does some intraday trading in the options market. He's very, very detailed with how our program works and can help you get your portfolio set up to be weathered proof against downside risks just like ours. Now, a couple reminders. We have a paid-only webinar on Wednesday at 1 p.m. Eastern. This is going to be an email sent to you about 1 hour before the webinar starts from Zoom. This is where you can actually chat with me live. And then Thursday, we have our open webinar for everyone. A lot of our paid folks will show up on that just to chat and tell their experience with other people interested in joining our program. So keep a lookout 1 hour before the webinar starts for your access link. And if you haven't yet, subscribe to our channel, click the bell button, download the YouTube app. You can watch our daily live stream from your phone on the go as well. And here's our disclaimer. I'll give that a minute for folks to read while I check the chat box. Keith says, first day here. Welcome, Keith. Did you take any of our trades last week? We've had a heck of an October so far. All right, guys, let's take a look at the track record. Then we'll jump into some of the topical information. And again, I do want to point out, if you go to the description box, we have a lot of links for you. One is a link to join the advisory or at least read about it. We have a boot camp program starting in November. So if you want to become an expert at this strategy, I highly recommend you join our boot camp. We also have some bonus trades, primarily trading the futures market, predicting the Chinese will devalue their currency. You can check out the pricing. You can view all trade alerts. Not many advisories will go post every trade alert they've ever issued, including this daily video, for everyone to see. It's not password protected. Next link is the track record. So you want to go through my track record and look at every single entry. Go for it. We're about to look at the track record in a minute. Keith says he just got into his positions today. Well, that's great to hear. And then we also have the live stream doc. So if you want to see the 79 pages of content I've collected over the last 48 hours, you can do that by going to this description box and clicking that. And so if you do click any of these links, here's what the update page looks like. We do have the trades organized by category here if you want to just follow a certain program's trades. And you can see every last issue is here to publicly view and scrutinize. Here's our advisory, although these screenshots will be updated every day we update that. If you want to read about our boot camp, there's a lot of information about this. It's a 16-week boot camp. We're not trying to make you some kind of crazy maniac options trader. Instead, we're just going to make you a specialist at generating retirement income following this program specifically. So you can read about that there. And then you can also look at different financing options where you can either get the advisory, the boot camp plus the advisory, or just the boot camp. Okay, quick look at the track record. Let me zoom in a little bit. sitting on a 17% return since starting this last December during the Christmas massacre. The bond portfolio is killing it, absolutely 18.6% return, and almost half of our total profits have been generated from that part of the portfolio. Our buy and hold portfolio is up substantially, 53% return, and only manages 10% of the assets. This is a very exciting time to be investing in gold and silver, and I think cryptocurrencies will have their heyday soon as this whole US-China trade war escalates in the next few months, most likely. Tuesday trade rotates into whatever the hottest asset is to play right now. That is spot silver. It has a return of 14%. Our safest bread and butter trades is, of course, the SPY ETF, up 9%. And it has also generated a substantial portion of our profits. What's more important, though, is not the total return we've generated. It's the ratio of the volatility or the drawdown against our returns. So our only loss is in July with a return of negative 1%. However, if you go back and look at May when the S&P 500 was down 5%, we squeaked out a 2.2% return. Or if you go to December when the stock market was down up to 15%, we had a 1.2% return. So the strategy is very safe. The stock to bond ratio makes it very hard to lose. And then you throw in some gold and precious metal assets, and it gives us a nice little extra profit. So think about it. What's your maximum loss this year and in December? Is it greater than 1%? If so, you might want to think twice about your strategy. And if you haven't beat the 17% return we have, and you've also had a bigger drawdown than 1%, then you really might think hard about how you're trading the markets compared to how we are. Now you can see the breakdown of each portfolio month by month if you scroll through this and see how they all overlap together. If you click on these tabs below, you can see each trade. In the purple we have the stock trades. In the red we have the call options selling, and if you scroll over further you can see our long options, primarily buying put options. And again, down here we have each portfolio broken up so that you can clearly review the trade history of each strategy. Now, of course, the best bet is to overlap them together so you get a weather-proofed portfolio that's very hard to lose. Okay, so let's take a look at all the content we've collected. Start off with some charts. Crypto is probably not going anywhere. There's so much corruption in the world from good people, bad people, politicians, and they want to get their money off the grid. The best place to do that right now is really in Bitcoin and Ethereum. So I think this is going to be a long-term trend, and with the central banks printing money at record pace, most likely in the next 24 months, the boom in cryptocurrencies and precious metals is probably just getting started. Trading volume's healthy, so keeping a close eye on that. We currently have 1% of our total assets in Bitcoin and 1% in Ethereum, and dropped our GDX position from 10% to 8%. But these really achieve nearly identical goals in our portfolio. So if you don't want to mess around with crypto, no worries. Just have that 10% position in GDX. But we got Bitcoin at 3,500 and Ethereum something like 45 in our portfolio. So we're up huge on that and continue to hold. Dollar index remains strong. This signals that currencies around the world are facing problems. They have a dollar shortage. They can't afford the interest payments that are all denominated in dollars. And as their central banks lower rates and print money, it weakens their currency. That's why we're seeing this flood of money to the dollar, to U.S. stocks, and to U.S. bonds. And I think this trend will continue unless the trade war really gets unhinged. Look at the commodities market. I like to see oil trading between 50 and 70. If it goes below or above, that can signal some problems for the equities market. Meanwhile, gold remains at that 1,500 level. and spot silver still at $17.50. So I'm expecting silver to jump to probably around $20 to $22, and at that point we would rotate from SLV, the silver spot price ETF, into SIV, which would be the similar idea we did with GLD and GDX. So we would go to the silver miners ETF. In the TLT ETF, we're primarily holding these 30-year treasuries, and my expectation is this yield's going much lower as the trade war fails to make progress. Now, we're playing the long side of the SPY right now in the anticipation of hope of a trade deal or perhaps delays in escalation, but I really don't think we're going to get a real deal. How low can the yields go? Watch the German bonds. As long as the German yield is traveling lower and lower and in this negative territory, I think there's quite a bit of room for our 30-year to travel maybe down to 1.5. So that would push the TLT significantly higher than it is now and remains our best way to profit from downside in the SPY beyond our collar that protects it. Meanwhile, we're finally getting some action in the Hong Kong exchange. There's been an ATM bank run all weekend. Carrie Lam made it illegal to wear the mask. The protests rage on. This is getting out of control and really signals to me that we're probably going to see escalation between U.S. and China. Here is the Chinese currency, which is part of our boot camp trade. We're going to be shorting the Chinese currency as soon as we see Trump lose his temper, which I think is just around the corner. And a lot of it ties into this Ukraine scandal. So it's funny that this all ties together, but maybe one of the catalysts that pushes Trump to really blow the lid off of this scandal, put the pressure on China, and I think the reaction will be this currency gets significantly devalued. So every 10 cents this travels higher, we stand to make $1,000 profit per contract we put on. So we'll be issuing that trade alert when the time comes, but you can see the market's already anticipating it and gradually pushing that conversion rate lower and lower. There's a little more zoomed in picture of it. FXI is a large cap Chinese ETF that I would like to buy put options on as soon as we get more of this delisting the Chinese securities. We had Larry Kudlow on TV today saying it's not on the table yet, so we won't rush into that. My bet is first move is this dramatically devalues. Second move, if the Chinese still won't do a deal, then we delist their stocks, and then FXI could really crater. Even just the warning that they might do it could push that back down to that 2016 level. And when you look at the big problem for China, it's much bigger than 2015 and 16. So this could potentially go significantly lower. So puts on this could be very valuable. Looking at the credit markets to get a feel for when this whole corporate buyback scheme will end. And it's nowhere in sight. This is the junk bond ETF, still trading at near all-time highs. And that signals that even the worst companies can get access to cheap credit right now to buy back their own stocks. LQD is your investment grade corporate credit. And of course, it's near all-time highs. Companies like Microsoft can literally go to foreign countries and sell their bonds at a negative yield. So they're getting paid to borrow money and then buy back their own stock. So that's just absolutely insanity. Makes it hard to bet down on the SPY in that kind of environment. Here's the silver ETF. For it to get back to the 2012 level, when we had the last big QE run, it got to $47. Now, I do think there's more money to be made in SIV, but not until we see spot silver jump significantly. So keeping an eye on that. Here's GDX. To get back to the 2012 QE days, we got a nice run up to 66. I think it's going to go significantly higher than that because the problems today are significantly worse than in 08 when we're just trying to cover up malinvestment in U.S. real estate. Now we have malinvestment globally that's going to implode from from the Chinese credit bubble popping. Here's that TLT, and it's nearly at 148 a few weeks ago, and I think it's going to bust much higher than that on the disappointment of the U.S.-China trade relations. Here's a SPY ETF traveling higher again because it's the only place to go for a real yield. You know, we can speculate on bonds going lower and lower to a certain degree, but if you want a real profit from something like an equity index, the SPY really has much better outlook than the rest of the world. Of course, that all comes to an end if we get a major escalation in the trade war. So we're carefully trading the SPY right now. Fed came out saying QE would be appropriate if a recession were to come. Goldman Sachs says U.S. is not close to recession. Market gains secured. Bunch of pro-Trump quotes coming out this morning about incomes being up and taxes being down. If you really want to jump into the Ukraine scandal, I have a few resources for you. This link right here goes through the history of Hunter Biden and Devon Archer. These guys have had their hands very dirty for a long time, taking advantage of the power of their fathers. And so if you really want to dig into that, there is a lot to learn. Up above, I actually have access to a book called Secret Empires. It's an 8-hour audiobook that really details the history of Ukraine and China and how money has flown out of the U.S. into these governments and vice versa through these two particular gentlemen. Repo Madness continues. Apparently JP Morgan is one of the biggest banks using this, and they're extremely tied to China. So there may be some major credit problems in China, also with SoftBank, with their WeWork project really blowing up in their face. A bunch of drama over the weekend about a GM supporting Hong Kong democracy. China came out immediately, put pressure on the NBA to retract the statement. So this is going viral on Twitter all day. Kyle Bass is having the time of his life with all this drama. John Segro asked, do I worry about dividends? Nope, I don't. So Hong Kong is the currency that Kyle Bass recommends shorting in all of his interviews for the past year. And now this is really coming to an escalation point that may break the Bank of Hong Kong, and they're putting huge restrictions on how much cash you can get out of the ATM. China says they're not going to do any sort of structural changes to their government, so that's pretty much means no China deal. They're meeting on Thursday and Friday this week, so we just want to be prepared for bad news to come out of that. China banks are running out of cash in Hong Kong and USD. Maximum withdrawal limit dropped from $1,300 to $38, a drop of 34 times. Hong Kong government has issued a statement denying it will use the Emergency Regulations Ordinance to close the stock market and seize assets. The Hong Kong Market Exchange has denied it will limit cash withdrawals amid online rumors that Hong Kong is running out of cash. There's lots of drama and rumors. Here's Daryl Morey. I did not intend my tweet to cause any offense to Rockets fans and friends of mine in China. I was merely voicing one thought based on one interpretation of one complicated event. I've had a lot of opportunity since that tweet to hear and consider other perspectives, and he feels bad about it. Took it back, deleted it. This tweet shows the power of the CCP. Sad to see Americans forced to abide by their values. America is truly in dire straits. General Electric, one of the biggest creditors in the investment grade bond ETF, or the biggest actually, cutting pension plans by $5 billion. NBA came out with a new statement, so because the Chinese pulling back all their investments for ads. So this has gone absolutely viral, showing the tensions are building. It's embarrassing that we sold a professional sports franchise to a state actor of China that would write something as offensive as this. He should write his boss that China should abide by the Sino-British JD 1984 that the Chinese signed to leave Hong Kong alone until 2047. Even Andrew Yang is jumping on the anti-China bandwagon. We've seen Elizabeth Warren doing such. Really, the Chinese had one point man to save their butt in this trade deal, and it was Joe Biden. They spent billions trying to secure and buy his seat, and that's what all this drama is all about. This whole Ukraine scandal and China scandal with Joe Biden has completely destroyed his chances of election. And this does put a lot of pressure on China now that it appears they have no high-up allies currently. And we'll look at a link I have. I have about 25 pages of notes about just how influential China has become in terms of buying out political leaders in the U.S. And it is appalling, to say the least. The Chinese government banning the rockets is a terrible move. Andrew Yang. Trump is not acting like a warmonger. Getting a lot of slack for that today. Nancy Pelosi has a net worth of $330 million and supposedly makes up to $290,000 a year. And now we've got the Trump administration daring her to actually file impeachment. I don't think she will, because it really is bad news bears for the Democrats if all the details of the scandals come out between Ukraine, China, U.S., and all these different political leaders. China has now banned South Park because of a issue that came out, which you can watch if you want to go pull up the South Park comedy. Unemployment rate remains at record lows, 3.5%, without wage pressure. U.S. is in a very strong position. HSBC, a major European bank, slashing 10,000 jobs. CEOs were getting fired. Supposedly they were trying to support the Chinese currency exchange rate. We're buying a lot of future contracts, trying to short the dollar to protect their currency. That obviously imploded on them. And maybe this is one of the banks that's using the Repo Madness right now. We know JP Morgan is for sure. China narrows scope for trade deal with U.S. ahead of talks. So they're taking off the table any kind of infrastructure reforms. That means there's not going to be a deal, 99%. This is the Fed balance sheets around the world, central banks' balance sheets, and they are projected to start adding between $150 and $250 billion of liquidity per quarter going into next year and ending this year. We're already seeing the Fed has put $200 billion on its balance sheet this month and last month, so it does look like QE is about to roll out in full strength. One of Donald's promises was to drain the swamp. That's something I'm not sure he's really achieved yet, but this whole Ukraine-China scandal may just do that. So you really got to dig deep if you want to get to the bottom of that. I've spent some 15 hours just looking into it, and I'll give you guys some links to study into the history of that. But the bottom line is that there's a bunch of hedge funds that were set up. All of them start almost with the name Rosemont, managed by John Kerry's stepson. and Joe Biden's son. And if you really look into it, they took billions of dollars from China. They also took advantage of a Ukraine gas company where the U.S. sent $1.8 billion and it completely disappeared. So there's some major scandals unraveling right now. And this really knocked off China's big political person that was supporting them and left us with Elizabeth Warren, who is very anti-China. So this is getting very interesting. And I think if the Democrats continue to push this whole impeachment narrative and the Chinese go ahead and say they're not going to make any structural deals, that Trump will go full out on the trade war front, especially because he wants to force the Fed to lower these rates lower to be more in line with the rest of the world. So look out for some major escalations in the next few weeks. Hong Kong says up to a year in jail for wearing masks at public gatherings, and the gatherings continue to get more and more out of control. Apple going to highs is a good sign for the overall market. And then Zero Hedge jokingly puts, actually it's just a sign that it's expanded its stock buybacks by $75 billion. Here's your Federal Reserve balance sheet suddenly popping up $200 billion. No announcements, no anything. This Wednesday we'll see the FOMC minutes. I'll see if they have any notes about this. But they say one thing, then do another. They say the economy's great, we're in a mid-cycle adjustment, and then each meeting they're lowering the rate by 25 basis points and resuming QE without telling anyone. This is a statement also put out by Jeffrey Gundlach quite frequently. The next recession begins once the yield curve steepens and credit spreads rise and bank stocks fall. Bank of America's hard net. So we have the inverted yield curve, but that just really pushes all the central banks to lower rates, go into QE. It's when that TLT drops quickly, the LQD drops quickly, the HYG, that's going to signal that credit has been cut off from corporations, and that's when we really want to bet in a long-term downtrend for equities. So we're not there yet. Obviously, all of those credit markets are super healthy right now. The Fed's temporary open market operations, aka Repo Madness, are starting to look rather permanent. And they've extended it into October and I believe November. Fed balance sheet up $185 billion in September. Here's the reason why the world is headed for recession. Despite everything it has done, China's credit impulse is once again sliding. Now, if China cannot get access to outside capital, this is almost surely going to be a Lehman moment times 100. So, 2008, it was the U.S. housing bubble that popped the markets. Go back to the dot-com bubble. It was mostly U.S. tech companies. This time around, it's much bigger. The problems are much worse, and it's government debt at an outrageous level around the entire world, and it looks like it's coming to an end. And I would agree with McCarthy. I do not think that this is going to turn into an impeachment. I think it's just noise to cover up what's been going on for the last decade. Nobody thought two things. Nobody thought Trump would be elected. They thought they would have someone they could trust in there. And then two, Ukraine had a surprise change in leadership with a talk show host of all people who's also trying to get rid of all of this corruption. So I think this is really more of a cover-up than anything else and a distraction. The do-nothing Democrats don't have time to get it done. So that's Trump's new slogan. Jeffrey Gundlach, take a look at how CCC-rated junk bonds are massively underperforming pretty much every other fixed income sector year to date. So I'm not tracking that low on the credit circle yet, but clearly if the corporate buyback scheme stops, that's probably going to put an end to the equities rally. So I do follow Jeffrey Gundlach closely. The last 2 years he was remarkably accurate. This year he's been probably ahead of the curve on all of this. He's been betting on emerging markets and a drop in the dollar and rising rates. So of course none of that has come true yet, although I do follow his information very closely. Charlie Kirk is someone you can follow on Twitter if you want a lot of information about the Ukraine scandal. Tech companies, it's interesting. If Elizabeth Warren really is the Democratic leader for the election, who's going to support her in the big money world? Typically, these companies she's attacking have really supported the Democratic Party, so it's interesting to see her really going after everyone. So she's become very active. Twitter poster, we're watching that closely. Joe Biden is done. This whole scandal may have been put to light simply to get him out of the way for the election. So that does seem to be the case. Elizabeth Warren wants to go after Facebook, wants to create more unions, wants to get Medicare for all. So this will be an interesting election, to say the least. This is the Communist Party Twitter handle. So quick to instigate, showing once again what you really want to see in Hong Kong. Most is turmoil, not democracy. Canada, the U.S. ally, bans masks at protests. The U.S. can stage the beautiful sight of mass protests. Nancy Pelosi, Hong Kong, invoking the emergency regulation ordinance to ban face masks does not answer the people's grievances and only intensifies concerns about the freedom of expression. Nancy Pelosi, 79 years old, in Congress, 32 years since 1987. Max salary, $223,000 a year. Net worth, $238 million. How does that happen? All right, guys, that is a wrap for what we have today collected in our content feed. Let me pull up our track record. We'll talk the big picture one more time. So our current strategy right now is essentially long all of these assets. We're long the TLT, long the SPY, long silver, long gold. My expectation is that the hope of a trade deal and really nowhere else to invest in will push U.S. equities higher until we get a breakdown in the trade talks. So that's why our collar strategy works so well. The TLT doesn't seem to be selling off at all during the rally in U.S. equities from last week all the way through today, and that's because we see this quantitative easing happening. The Fed is now buying up treasuries, controlling rates, and I think they want to push these rates lower. So most likely we can enjoy a nice ride on the TLT slowly just because of that macro event happening. But when we do get the U.S.-China trade deal to break down, if it does, I suspect that the TLT will really come in handy with a big profit for us. So current return in October is 1%, and we're just really sitting now waiting for news to come out. We got Wednesday, the FOMC minutes will be released. Probably not a whole lot to see on that. The end of the month, the Fed will likely drop rates by 25 basis points, unless the trade war really escalates by next week, then maybe even more dramatic cutting. And then on the side note, we have the trade talks officially starting Thursday and Friday. But I just don't see it happening. So that's where we're at. Hope everybody enjoyed today's issue. Tomorrow we trade the SLV ETF. And so if you don't want to miss out the trade alert, call Dean right now. Upgrade your free trial, 505-322-7515. Any questions out there before I let everybody go? All right, guys. Well, thank you so much for your time. We have a new video coming out tomorrow, same time. We got our paid webinar Wednesday and our freebie webinar Thursday. So thanks again. And we'll be keeping a close eye on this U.S.-China trade war, as well as what the Fed has in store for us with the FOMC minutes Wednesday.